Hi, Patricia. Welcome back to Benzinga. How are you doing?
Very well, thank you.
It's awesome. So exciting day for gold. It set another record high and is trading at about $2,214 today. What's driving the rally, and what's your outlook for both the short term and even the longer term price action?
Well, I think a lot of the strength in gold has to do with fear of a widening war in the Middle East. As you know, gold is a store of value and a hedge against financial risk. Including inflation risk, and geopolitics very often play a big role in gold. So I do think the difficulties between Hamas, Israel, and Iran, Hezbollah, these things are playing into the record prices we're seeing for gold. I think in the short run, we could possibly see gold moving towards 2,400 per ounce. Now, it's going to depend, I think, a lot upon the geopolitics. Also, of course, the Fed is expected to begin lowering interest rates at some point later this year. Could be an indication tomorrow being April 10th, on the just what's happening on inflation in the United States. There may be a sign if inflation moves down, that the Fed may move to begin lowering interest rates around June. That would be a positive for gold because gold does not pay interest. So when interest rates move down, gold usually moves up. So I think in the short run, it's possible to see 2,400 per ounce for gold. Longer run, in the next 5 years, possibly towards a $3,000 mark. And that's based on where gold was back in early 1980 when it moved to record highs. And if you inflation adjust those numbers in today's dollars, you'd get something a little over $3,000 per ounce. So I think the outlook is positive for gold. It's something that I think investors might like to have a little bit in their portfolio. Don't go overboard, but it's always a good risk if you're thinking about hedging financial risks.
Another metal that you're bullish on that we talked about back at PDAC is copper. You were anticipating at PDAC a move over $5 a pound within a few years. When we last spoke, copper was trading at about $3.85 on the LME, and since then the price has climbed to a 15-month high north of $4. How do you assess the current market conditions and price movements in the copper market, and where do you see the price of copper reaching $5? Or do you see your projection of $5 coming sooner?
Well, I think gold has gotten a bit of a lift in the last month. My expectations that smelters and refineries in China are going to announce a cutback. And this is because concentrate supplies for copper are very tight internationally. And they have tightened because of the shutdown of the Cobra Panama mine in Panama last year. And also expectations that Anglo American will have lower production than originally expected this year. That's going to offset the further ramp up of a number of projects, including Teck's Quebrada Blanca mine in Chile and Ivanhoe's Kamoa-Kakula mine in the Congo. So instead of having a small surplus in copper this year, the market now expects a small deficit. And that's the thing that's kind of driving copper up. And I continue to have bullish expectations for copper. I think copper is going to move over the $5 mark probably in another year. I think the recent shutdowns are a sign that may happen sooner than the market has been expecting. So I do think that is an area of real interest for investors.
Investors have also taken an interest in uranium, and there's been a recent surge in uranium prices. How do you interpret this upward trend, and what factors do you believe are driving the momentum in the uranium market? For example, why are governments becoming more interested in nuclear power?
Well, nuclear power, as you know, emits almost no greenhouse gases. And also, the other pollutants coming from nuclear are very small. So it is an environmentally quite friendly source of electricity. There's going to be tremendous demand for electricity around the world in the next decade. And that has to do with really the shift to the electric vehicle and the electrification, digitalization of a lot of industry. And of course, interestingly, I think the all the interest in AI technology may actually be quite power intensive. So we're going to need a lot of electricity to power these things. And nuclear is a very good option. The Chinese have a huge, absolutely massive construction project for nuclear power plants across China. Japan is going to bring back on stream some of the plants that it shut down after the Fukushima accident. And of course, the demand is very high in the United States. The nuclear power plant situation has stabilized in the US. So I think the demand growth for uranium is going to be very good.
What do you see for pricing for uranium in the future?
Well, the price got up on the spot in terms of spot prices for yellow cake, slightly over $100 per pound. It fell back a few weeks ago to about the $95 mark. Now, these are high levels for uranium prices, not peak levels, but they're high. And it compares to about $30 back in early 2021. So what appears to be happening is uranium miners are starting to ramp up their mine capability. Cameco, which is the world's biggest publicly traded uranium company in Canada, it's going to restart McArthur River, which is really a big mine in northern Saskatchewan, also ramping up Cigar Lake. Some of the mines in the United States are also going to be restarted. Some mine capability in Africa, excuse me, will also be restarted. So it might put a bit of a damper on near-term prices for uranium, but we're way off the record levels of a decade ago. So I think that a lot of the uranium producers, even if prices don't move up too much more in the near term, they're going to benefit from higher volumes and a very good outlook there.
We also talked at PDAC about lithium prices. Could you provide an update on your outlook for lithium given the recent fluctuations and the environmental inspections in China? And do you see any significant changes in the demand and supply?
Well, lithium suffered really quite a tumble last year. Lithium carbonate prices in China went from record highs of 85,000 per tonne back in December 2022. They fell to a low just over $13,000 around February this year. So the price has edged up in the last couple of weeks. And it's edged up because the refineries in China had destocked, which was one of the key reasons for the price tumble last year. They're restocking, the price has come up a little, but I think it's going to be a very slow recovery for lithium.
That's awesome. Well, thank you again for taking the time to talk to us. It's always a pleasure speaking to you.
Thanks very much, Melanie.